2024 was a volatile year for the energy landscape, while 2025 may bring a new era of transformation as President-elect Trump readies to return to the White House. But before the change of leadership, President Biden has taken action to ban new offshore oil and gas drilling along most of the U.S. coastline, a move that could frustrate Trump's energy plans. Here with more on what is ahead for the energy ecosystem in 2025, we have Clear Street senior research analyst Tim Moore. Tim, it's good to see you. Let's start off there, Tim. President Biden making this move, ban new offshore oil and gas drilling in most U.S. coastal waters. What did you make of that headline, Tim? How could it possibly impact the energy sector?
That's a great question, and thanks for having me on. We're excited to be here. It's interesting because, this has been a 70-year-old Lands Act Protection Act, and we weren't surprised with this happening a couple of weeks before the inauguration. It could be irrevocable, or at least seem irrevocable at first. It would be tricky to reverse and override. It's not anyway impossible. They need congressional approval. But we just point out, look, that was 625 million acres of offshore drilling protection on the continental shelves. A lot of it's in the Eastern Gulf. It's in Florida, off of Florida, Georgia, South Carolina. In our view, even if Trump is able to kind of reverse or get to it, it won't really improve any production until at least 5 years. It takes that long to bring on new production. In the meantime, we're pretty excited about offshore drilling. We cover Tetra Technologies, which has a couple projects and wells being involved in there in the Gulf of Mexico. And, we think the Gulf of Mexico itself could keep offshore production pretty good for the next few years. So we don't actually expect much to be done anytime soon with new additions.
And Tim, when you look at the performance of traditional oil and gas stocks over the past year, haven't done so great as a group, right? And I was just looking at some research from Bank of America that showed that long-only funds are at historical underweights of energy to the S&P 500 benchmark. Does that change in 2025, and what's the catalyst for that change?
That's a good point. We actually expect oil and gas stocks to outperform this year, and we can go into catalysts, but there has been, as I mentioned, 2 years of underperformance. Some of that's natural gas prices going down, but they started to recover in October. It is a cyclical end market. Really strong years in 2022, 2021. There was a rotation in and out of that. But we do expect the Trump administration to relax the permitting rules. They remove a lot of red tape, we expect. That'll bring on some drilling on federal lands. It brings on some new drilling projects on lands. So we think that that'll start getting priced into stocks. And we actually expect the stocks to start re-rating this summer. And we also want to emphasize the Trump administration has come out with rhetoric and statements that, they want to secure energy. They want the U.S. to be the leader in production and development of oil and gas in the whole world. We think that's going to help LNG exports. And we also think, it could be a pretty good year for oil and gas stocks.
Tim, switching gears, another theme I want your take on, solar. How do you see that theme playing out in 2025, Tim, and what in your way would be a smart way for investors to play it?
Well, thanks for asking for that. We cover 2 solar stocks, and they've actually done pretty well in the last few weeks. We cover Sunrun, and we put out a report on that on Friday. We think that that's one of our top picks in the clean energy sector. We recommend investors getting into that. They're the #1 leader in residential solar installations and battery storage deployments. They have something like 18% market share of the industry and 50% market share almost of subscriptions. We think that's a good stock to play. We also cover Altus Power, which you were talking about in your show a couple of weeks ago when there were some takeover rumors mentioned for that. We think that solar is the best positioned clean energy play in terms of end markets. We like it better than wind. We like it better than hydropower. 6 to 7% of houses in the U.S. have residential solar. We think that can go to 20% over time. You look at Australia, it's a third of theirs, households that have it installed. It's very good economics. The cost to install this and the systems are down 50% in the last decade. It's more affordable. And we think that the U.S. really needs to pivot more towards solar, and that'll be the winner, we think, of all the clean energy transition markets.
What effect does the incoming administration have on that?
It's a very good question. It's been an overhang on the solar stocks since the morning after Trump won the election. There's an overhang of what's known as the Inflation Reduction Act, which I'm sure you've talked about, the IRA. There's some investment tax credits that have been very helpful to help solar adoption and penetration. Those could be either reduced slightly by the new administration, or they could move out to sunsetting years. A lot of those don't sunset or expire into 2032, 2033. So those can move up a few years. We think the Trump administration will do some type of reconciliation with their tax cuts, and it'll be more of a scalpel approach rather than just removing and completely annihilating the IRA. We just want to remind investors that about 2/3 of the IRA funding for these projects have been in Republican areas, and they create jobs. So we don't think it'll get completely pulled away. We just think it'll be some fine tuning. And some of the companies are getting smart ahead of that. We put out a report on Sunrun. We think they're going to do a safe harbor invokement, which lets them, sign up a deal like they did. They announced today with Solar Edge to do, buy forward 5% of their project costs. So that could help them buy up to 4 years of protecting some of these tax credits. We'll see how that plays out. We don't know if that'll get put into effect, but that is a possible workaround.